What's up, everyone? It is Sri here. This is the much awaited C3 Trading Masterclass, a gargantuan task whereby I am going to summarize all of my trading methodologies, strategies, rules, mindset hacks, and try to simplify the process as much as humanly possible for those of you, whether you're starting out as a trader or you are a veteran trader. I'm sure that there's something that you can pick up along the way that will be of value to you. This is completely free. I'm not doing this for the money. I am a trader. That is my profession. That is how I make money. I am also at the stage in trading where I'm starting to taper off, and I will likely at some point slip into the shadows. And so I want to leave you with this masterclass, which some of you may be watching months or years from now. Of course, there are the educational courses. Some of them are free, you can find on the Discord. Some of them are paid, and those are actually very detailed and very valuable in and of themselves. But for those of you that maybe can't afford or aren't willing to pay, which is totally fine by me, again, this is a service. This is the reason that I've created this trading masterclass. So for those of you that have the patience to sit through this and who know my caliber as a trader, who have watched me over the years, well, good on you. And if not, that's fine too. So I want to start by talking about what you won't learn from me in this course. What you won't learn from me is how to bounce back from failure. You won't learn from me how to take appropriate risk. I can give you ideas. I can point you in the general direction. I can even give you detailed spreadsheets, but I can't, you can lead a horse to water, right? I can't make you do these things, okay? You have to learn and take these risks and experiment and try and fail over and over and over again. I can't teach you how to be tenacious. I can't teach you how to be persistent, to consistently show up day in and day out when you're sick, when your grandma died. I can't teach you these qualities, these behaviors, these patterns of being that are really going to ultimately determine your success or failure as a trader. But if you are showing up and just watching this masterclass, that is already a good positive sign. And if you can sit through all of it, whether I'm going on a tangent or whether it seems like it's relevant information to you, if you can sit through it and try to absorb as much as you can from it, then that is going to be a very good positive sign that, just to be quite frank, 90% of traders just won't even bother to do. And so if you want an edge as a trader, yes, it is helpful to absorb information from other traders that you value, that you resonate with. There's a reason that you resonate with me and my material. Maybe it's something in my voice. Maybe it's just the simplicity of my strategies. But whatever it is, if you resonate with it, then you're much more likely to absorb it and to apply it in your own personal trading. Now, I'm not asking you to do exactly what I do. And in fact, I encourage you to come up with your own style, which may turn out to be a blending of sorts of different strategies or styles. But what I would discourage you from doing is bouncing back and forth between different strategies and different teachers, because that only leads to confusion. Once you find something that you feel, hey, this really has some potential, believe in it and stick with it, okay? And be willing to experiment, be willing to fail, be willing to get up and try again. And this is what's going to help you. The experience is really the ultimate teacher as a trader. And I can tell you, I've had some experiences where, for instance, one trade I accidentally risked my whole account, which was quite large at the time. The slider went all the way to maximum, put the whole thing in the trade. It was a higher leverage trade, and I watched my account on the brink of complete collapse. Fortunately, I was right, and it went back down, and as soon as it went to break even, I cut the trade. But I could have lost all of my account with one simple mistake that I made. I will never make that mistake ever again. But that wasn't something that I could have foreseen, but it happened regardless, okay? Luna was another example. I took a massive trade on Luna right before the death spiral to zero. You wouldn't believe it. It was the worst possible timing. Okay. And I will never do that again. I will never risk that much on a single trade ever again. I did eventually make it back. It took me quite some time to do that. But these are lessons, and they're hard lessons. And a lot of traders, they experience these just crushing defeats, and they give up. They just give up. You blow one account, you blow another account, and there's no sense of, there's no vision of, hey, you know what's possible here? What's possible is you could make more in a single trade than the highest paid surgeon makes in an entire year. And trust me, I've done that. You start having trades, big trades come through, you know, 1,000, 10,000, 100,000, $250,000 trades. And most people wouldn't dream of making that much money in a single trade. I'm telling you, it is possible. I'm living proof of that. Okay? I'm not one of those traders who's going to brag about how much money I've made. Of course, I'm actually a public figure. I'm not hiding behind some meme JPEG. You know, I'm actually here on the front line sharing with you. But I feel like it's important to understand that it's not a linear progression. You're going to take 10 steps forward and then maybe 20 steps backwards sometimes. It's going to feel like that. But no matter what, you're always moving forward, even when you're making mistakes. And we're going to learn how to profit off of the mistakes. And we're profiting by learning the lessons and moving on. It's just like getting thrown a curveball in baseball, and maybe you strike out, and then next time at bat, you understand how the pitcher is moving his arm when he's throwing that curveball, and you don't make the same mistake again. You knock it out of the park. And that's the same with trading. Maybe you have to strike out 10 times or 100 times before you knock it out of the park, but eventually you're paying close enough attention and you're working with that and you're learning from it. That's the most important thing. So let's get into the rules here. Number one is be a humble beginner with infinite patience. This is easier said than done. Humble beginner is always learning. A humble beginner, the book Zen Mind, Beginner's Mind comes to mind. That's something I would recommend reading. It's like a child who is receptive. Even if you've been trading for 5, 10, 20 years, always be receptive to new ideas. That doesn't mean that you have to agree with everything that everyone says. And as a matter of fact, as you progress as a trader, it is a good idea to really focus on just a handful of traders that you really respect and not get caught up in 10, 20 different people, many of whom are most likely not traders. Some analysts can give a good show, but they're not necessarily actively trading, right? And they're not able to execute, and they haven't been on the front lines. They haven't had the experiences that someone like me or another trader has had, so they can't guide you in the same way. And so you have to have that discernment. Be humble, be a beginner, but have discernment also in knowing what information is going to be best for you. And you really will feel it in the cells of your body. I mean, it sounds maybe new age, but it's really something that you will resonate, your vibration will resonate with it. It's just like when you're eating food that's really good for you, your body feels it, your body reacts to it instantly. It's the same with this information. Some of you are going to hear this and maybe it's not going to click with you. And some of you it's going to maybe give you that sensation, maybe the hairs rising on the skin at times, and you're just feeling like, yeah, I really do, I resonate with this, I agree with this, I feel like there's something to it. And you have to really follow that as a trader. And that is actually something that's going to inform your trading as well. Over the years, you're going to have those moments where maybe the technicals are lining up a certain way and strategies all fit, but then you're having that intuition and there's something else in the background, and it's that gut impulse, and it's saying, you know what, just sit this out because it's not really clear, right? And so that element is very important as a trader, and that's why I talk about infinite patience and meditating every day for at least 20 minutes. For me, I would say the minimum is an hour a day, and I also do other spiritual practices like yoga, and I also do different chanting, which none of this is required, but the more spiritual practices you do, or the longer you can meditate, the more the mind clears and gives you that sense of being able to make really focused decisions at the drop of a dime, when it counts the most, and being able to control your emotions. The emotional control is the biggest element of trading that is most often overlooked. Most people just focus on strategies and they focus on the execution. And I say, well, what's beneath all of that? What's leading you to make those decisions? It is your mind, ultimately. Everything comes down to the mind, and the mind controls all. And so the best traders are the ones that we know have the most emotional control. And unless you're born with a certain level of that, which many of us just, let's face it, aren't, meditation will really give you an edge that it gives you that extra boost, especially if you do it first thing in the morning, before you even look at the charts. If you need to glance at the charts for 2 minutes, fine, no problem. But beyond that, unless there's some big move happening and some triggers going off for you, it's best to sit and meditate first, and also to do it at night. But morning is the most important, because this will actually help you develop discipline and patience. The discipline is so that you can stay committed and keep showing up. The patience is so that you can wait for the proper setups, which for me as a swing trader, I might wait weeks for a setup, and then all of a sudden out of nowhere I get it and it's clear as day. And I can go in with conviction and risk 2, sometimes 3% or more on a trade because I feel really comfortable with that. And that may be the only trade that I take, but I feel really high conviction in that trade. And because my mind is clear and I'm calm and I'm not thinking about making money, which we'll talk about, rule number 12, I'm able to make appropriate decisions. And of course, this has also evolved over many years. And that's why, again, this comes from experience. But this is really setting the foundation for that, okay? So I'm really focusing on the rules here because mindset really is the most important aspect of trading. You definitely need to have an edge. You definitely need to have a certain level of technical proficiency. But without the right mindset, you won't be able to execute. You won't be able to take profits at the right time. You won't be able to cut losses before it snowballs into something much worse. It was Jim Rohn who used to say over and over again, work harder on yourself than you do on your job. And for me personally, I can attest to the validity of this statement. You will make more money than you could possibly imagine if you just keep working on yourself. Become a better version of yourself every day. Don't compare yourself to anybody else. If you work out, that's great. If you meditate, great. Have habits that give you a sense of discipline, that give you a sense of confidence and pride in yourself, okay? Believe in yourself, and adding to your knowledge bank by studying trading every day and showing up and doing the work even when you don't want to, that's all going to help to make you a better trader. So make a weekly time commitment. That's really essential. And it should be, when you're starting out, for me, it was hours every day. 2, 3, sometimes 4 hours a day, more. And then gradually I tapered off as I figured out exactly what I was going to do. I think I took maybe 10 different courses that most of them I paid for. I had mentors, and some of them were helpful, some of them were not. And I also studied charts on my own independently, and I back tested, and I tried trading on different time frames, and I tried everything that I could think of. And it is really a process of trial and error. But without that weekly time commitment, saying I'm going to do a minimum of this many hours a week, you're just going to start to slack off over time. Don't treat trading like a hobby. Treat it as a profession. Now, I understand many of you already have other jobs or you're in school. I get it, but you can make time for what's important for you. And even if it's just a half an hour a day, in a year's time, you'll be ahead of, again, 90% of traders who really aren't putting in that consistent effort. And I can personally attest to this because I've seen many traders that are in my Discord. There's maybe a couple dozen out of the 700 or 800 right now that are like consistently showing up. And that's a small percentage, right? So that's less than 10%. And I would say that is pretty much standard across the board with traders. So really it's just putting in that extra effort each and every day is going to already give you an edge. Decide your style. So this is really whether you want to trade on, say, the 4-hour timeline or time frame, or trade on the 15-minute and be a scalper, or the hour, or what time frames do you want to use? When do you prefer to trade? Are you a day trader? Do you want to just have to trade during certain hours in the day? Which for stocks, it makes sense to do that during the New York Stock Exchange hours. Or do you want to be more of a swing trader who takes, like me, 1-2 trades a week maximum, usually, maybe a couple of trades a month, and just rides them for longer? It's kind of like, the way I see it, it's like longboarding versus shortboarding. I know not all of you surf, but shortboarding it's a very fast sport. You can catch a lot of waves very quickly, but it's a short ride. Longboarding, it takes more endurance. You have to be more patient sometimes for the waves to come. But once you get a wave, you can ride it for, multiple times longer, and it can actually be more gratifying. It's a much longer lasting experience. So that's the way it is with swing trading. Is even though it's less trades, I can make more money in a single trade than some day traders make an entire month off of 30 to 50 trades. I have one friend, and he literally takes hundreds of trades a week. He just catches very small micro moves. And for me, I said to him, I would go insane if I had to trade like that. And I believe that for him, he's doing just fine. He's making plenty of money. But mentally, to me, that's too straining. I would rather really focus my energy on a much smaller number of high conviction trades. But you learn that through trial and error. Okay, but with my strategies, you'll have the opportunity to learn the style of swing trading. Okay, start small and scale. So this goes without saying. I mean, I've seen a lot of traders just throw 20, 50, 100K into an account and really blow the account. And I know this because some of them will trade under me, and they will just take massive sizes, and I could see the fees piling up for them, and more so than even I would pay in fees, and they have much smaller accounts. And so this is not good. It's better to start small when you're starting out, even though it may seem really grueling, sort of tedious, right? If you start with $100 or $500, I mean, relatively, what can you afford to lose initially? Maybe it's $1,000, fine. Okay, scale as you go once you start becoming consistently profitable. And what is consistent profitability? Usually a couple of months at least where you feel like you're winning more than you're losing. And of course, you can have a lower win rate and make more money. And that's the beauty of swing trading, is I can have one 10 or 20 hour trade, right? So that the risk reward is what I'm risking and what I plan I could make from that. So if I'm risking $100 in a trade on a $1,000 account, which I don't necessarily recommend that because it's 10% risk, I could lose that $100, and my reward would also be $100 if it moves in the direction that I want it to, the same amount of percent. Okay, and this is covered in great detail in the C3 Essentials. Actually, the free public video, which I will link to somewhere in the description or in the comments, it's the full breakdown of how to trade on Blowfin. So not everything that you need to be a trader is going to be in this video. The other half of it, the actual nitty-gritty of taking trades and sizing your trades, is going to be in the Blowfin video, because that's really clear. It's a 30-minute video. It's crystal clear, and it has links to the spreadsheets that I use for sizing and exactly how I execute trades. Okay, so that aspect I'm gonna leave there because I don't want to repeat myself here. I'm already repeating myself with a lot of this, but it's good, right, to be consistently thinking about these things and talking about these things, because every time I share, I also grow in my own knowledge and ability as a trader. So number 6, learn position sizing and risk management first. This is the very first thing you need to learn. And the big question is, how much am I going to risk per trade? So I understand if it's a $1,000 account or a $500 account, 1% standard risk per trade is not much. You're risking what, $50? Actually, no, it's, how much is that on a $500 account? That's only $5, right? So that's not much. So you can risk more on a smaller account if you want to starting out. But when you really start trading, when you throw what you've got into it, and again, it shouldn't be more than you can afford to lose. That's always should be in the back of the mind. It shouldn't be that you're putting your life savings in this from the get-go and thinking that you're going to somehow immediately outperform everyone else. Even the smartest people in the world, they don't necessarily become the best traders, and that I would say that's in large part due to a lack of patience and discipline. And maybe they think that's actually can be a disadvantage being really intelligent, because you think that actually gives you an edge when trading, when in reality it doesn't. What gives you an edge in trading is control of your emotions and discipline. And very few people have that. And very few people have the patience to develop that. So learn position sizing and risk management first. Study my spreadsheets. Use them, apply them. For me, I have rules. My rules are I will generally risk between 2 to 5% maximum in a trade. 5% is pushing it. Sometimes I'll do 1%. Depends on the level of conviction. And I won't typically take more than 1 to 2 trades. So if I have 2 trades, I might risk 1% per trade. If I have 1 trade, I might do 2 to 5%, right? I don't like to take more than that, because why? It makes you have to make more decisions. And what they found in studies, I don't remember the term for this, there's a market called market of choice in Oregon and other parts of the country, the US at least, that they give you like 10 options for everything. And it drives you crazy because you can't make a decision. It's much easier to make a decision when you have 1 or 2 options. They've proven this. And people who have more options than that, it's been proven that they're less likely to even make the decision because it's too much for them. So think about that, apply that to trading, having to make decisions about what to trade, how many trades to take. This is also why I say in the beginning, only trade Bitcoin, because Bitcoin is the king and Bitcoin sets the tone for the rest of the altcoins. And when you start getting into trading altcoins, what's going to inevitably happen is you're going to have to start tracking them against Bitcoin. So already you have 2 charts you need to pay attention to. And the third chart would actually be that altcoin Bitcoin pairing, right? So there's actually 3 or sometimes more charts to pay attention to if you're trading an altcoin. Furthermore, with altcoins, they generally have less liquidity. Now, crypto is an emerging market. This will change eventually. But as of right now, these altcoins, the lower you go down in market cap, which you can go down, scroll down in CoinGecko, you'll see the easier they are to move. You can move the price easier, which means you have to accommodate, you have to have wider stop losses, which again, this is covered in my Blowfin Essentials trading video. And you have to understand that they can manipulate the price easier, which means that it's easier for you to get stopped out. Of course, you can make insane profits as well, so it can work both ways. But if you're starting out as a trader, you want as much room for error as possible, and you want to have as few decisions as possible. And even as a professional trader who's been doing it for many years, I can tell you that the less decisions that I have to make, the better. It's better to ride your winners and not have to think about taking profits on multiple trades simultaneously. And also understanding that every asset, every cryptocurrency is moving differently. It's going to sometimes defy the rest of the market. And you have to expect the unexpected. But with Bitcoin, it is setting the tone. So Ethereum is okay as well. Ethereum is a close second. But Bitcoin is really the one that I focused on the most when I started out. And it's still the one that I go to when I am testing out my strategies or looking in the past to try to predict what could be happening, what patterns are playing out. Okay, it's the cleanest. it's the most efficient as far as when there is a strong move up, which we will talk about what an inefficiency is. When there is a strong move up in one direction, it tends to eventually be countered in the other direction, and gaps tend to fill. We'll talk about gaps. Demand zones, supply zones tend to be obeyed, right? So it follows, it's a cleaner market structure than basically every other altcoin. That's the other thing that you'll notice as we go down the list with the altcoins, is they tend to be not as clean. And I can tell you just by looking at a chart whether I like that chart or not. So for instance, XRP, I will share with you that chart. It is an oscillator. It spikes both ways. It looks like a EKG, and it's not fun to trade. And I don't know of any profitable traders trading XRP actively. I'm sure there are some, but for me, for the purposes of my strategies, I know what I like and what I don't like, just like with food, just like with women, just like with people in my life, right? So you have these ideas based on your experiences. And I can tell you, maybe you're going to say, you know what, I really don't vibe with Bitcoin. I don't seem to be able to trade it. Fine. Okay, maybe you can trade Solana. There are going to be times where maybe you find one asset and you can just really milk it. And that's great, no problem. But I really highly encourage you to start with Bitcoin, because it will save you a ton of money. I can tell you that, and it's also helpful if you have a tracking platform. So like TradeZella or something like that, that is kind of, it integrates a journal, online journal gives you the analytics of your trades and tells you which assets are the most profitable, which ones, where you had wins versus losses. And I can tell you, for me personally, the altcoins, it's always a mixed bag. I always do better with the majors. And I think that's because my trading strategies align more with institutional or smart money strategies. So maybe there are degen strategies out there that work better for altcoins. I have not discovered them. It's not my cup of tea. So that is my edge. And that is number 7. Find 1 or 2 strategies that give you an edge. I'm going to talk about 2 in particular, the sweep and the breakout, and they're similar in certain ways. And they actually can complement each other quite well. So for instance, I might take a breakout trade and then I might be able to close it or add to it, compound the trade on a sweep, right? So there may be some overlap there. And so that it's like my 1-2 punch, I call it. And those are the strategies I'm going to focus on with all of you. There are more strategies in my paid courses, but those are the ones that have made me the most money. So of course, that's what I want to share. Keep it simple. Keep it simple. Keep it simple. I see so many traders over the years, even great traders I've followed for many years, and now all of a sudden they're talking about footprints and order flow when they were just candle traders for so many years, and they think it gives them some edge. But if you're doing just fine, there's no reason to reinvent the wheel. If you're able to make money, which in my case, it was one of my mentors was Trader SC, and Trader SC, I couldn't understand what the hell he was saying, mainly because of his accent for the longest time. But one of the things that he did that just kind of blew my mind was he never used indicators, like nothing. He just drew lines on the chart and he knew he had mastered the art of drawing ranges. And he's a very aggressive trader when he wants to be, and he's very confident in himself. Like almost, many would say too much so, but that's actually been a blessing for him. And he keeps it very, very simple. Even though it sounds really complicated, in his mind it's very simple. And now when I go back and I listen to him, which I don't actively follow him anymore, but if I go back and I listen to what he's saying, I get everything. It's like I had to understand his language. I had to get on his wavelength. And that took me a while. It took me a couple of years, really, to be quite frank with you. And what he taught me really was how to draw ranges that were effective. And my ranges don't look like his to this day. And I won't take the same trades that he'll take. And yet, I still receive tremendous value from his teachings. Okay. So number 9 is journal every day. Read books. Journal every day. Write it down. Don't type it. Write it down, because it's psychoneuromotor, I believe is what it's called. There's a psychoneuromotor element. When you write something down, you're actually also speaking it under your breath as you're writing it. It's sinking into your subconscious mind, and it has an effect on the brain that is quite distinct from typing. Even though I might spend, an hour a day sharing content on various channels in Discord, sharing my thoughts, sending screenshots, talking about my trades to the members, I still have my own journal where I write down, and I don't just talk about trading, talk about life, maybe add some affirmations. For instance, money flows to me effortlessly. I have more than enough money that I could possibly need. I can share it generously with others. These are actually affirmations that I use on a daily basis, and I firmly believe in them. And maybe that wasn't always the case, but I do now. And it actually does make a difference. So that, but also, what did you do wrong with the trade? What's the mistake that you're making over and over again? Until you write it down, you're not going to become aware of it. You might want to just forget about that day, and I've done it, disregard the trade. But what happens if I go back and I reread my journal? What I'll notice is that there was a few patterns, for instance, impulsivity for me and for many traders. Maybe revenge trading, maybe it's going on tilt. But if you're entering trades before you have an actual trigger, right? And you start making this mistake, and it happens once, okay, no big deal. Happens 3 times, happens 10 times. And then you realize, at one point I realized I was trading for a 6-month period. I made a ton of money, and I lost that money in a series of trades in a couple of weeks. And that was the turning point for me with the impulsivity, because I realized that I was getting overconfident the more wins I stacked, and I was not thinking clearly. And I would take a few trades and I would literally self-sabotage. But I didn't realize it until I wrote it down, and until I reread what I had written down. Because I saw the pattern, I traced it back to multiple incidents, and I saw how that literally put me a year behind in my trading. Where I could have been, instead of being a break-even trader, which is at some point you will become a break-even trader and it will feel frustrating, but that's actually progress. I could have been a consistently profitable trader much sooner had I come to that awareness. So it's really about awareness. More than anything else, it's about self-awareness. And so the journaling will give you that self-awareness. I cannot emphasize this enough. Many people will overlook this. Again, it seems too simple. I'm telling you, just do it. Okay? Read books. Listen to audiobooks if you don't like to read in the car. Okay? The mental game of trading is one. Trading in the zone is another. And it could even be books. I've listened to books that help me indirectly with trading that were just about mindset. Like I love Jim Rohn. There's many, Brian Tracy. I listen to them. I read their books. I listen to their books. I'm constantly listening to self-improvement things. Just whatever is giving me an edge in my mind. Believe in yourself, number 10. So this is actually the most important thing, because you might have family and friends who just they're not going to understand what you're doing. They don't understand your vision. They don't know what you're capable of as a trader. You don't even know what you're capable of, but you have to believe in yourself, because nobody else is going to do that for you. And this sounds cliche, but it's so true. It's so beyond true. You have to believe in yourself. You have to believe in yourself. I wouldn't be showing up making this video for you, Anon, if I didn't believe that it was possible for you to do what I've done. It's definitely possible. It takes a lot of work, okay? It's not impossible. It's harder than most things, but of course the reward is worth that hardship, isn't it? When you realize how much money you can make and how much freedom you can have, and if in just 5 short years, say 5 to 8 years, and that's really quite possible, 5 to 8 years, maybe even 10 years, let's say it takes 10 years, you can make millions of dollars. Maybe it just takes a couple of years, okay, fine. But either way, even if it was 5 to 10 years, that's much more than most people make their entire life. So You have to believe in yourself. You have to know that it's possible. And you have to not impose self-limiting beliefs on yourself. Not think, well, I'm not as smart as him. I can't as clearly explain it as him. Well, for me, that's one of my gifts, is being able to teach and share and explain. But some traders, some of my mentors really couldn't teach if their life depended on it, right? And yet they were the best traders, some of the best traders that I've ever come across, right? So it's not necessarily a sign, right? If you're lacking in one area, maybe you're lacking in discipline, okay, work on it, make it better, improve it in some way. For me, that was never really a problem. Okay, showing up was never really a problem. And especially if you know, they say, if you know the why, you can endure any how, right? If you know why you're doing something, well, why are you doing this? Okay, write it down in your journal. I'm doing this for my family. I'm doing this so that I can have freedom. I'm doing this so that I don't have to work and be a slave to somebody else. Okay, yeah, that's all valid and you deserve that. Now work for it and show up every day, okay? Number 11 is accept all possible outcomes, no matter what. You have to, and this goes hand in hand with being detached, okay? You have to understand, like, before you even take a trade, okay, I'm risking $100 or $1,000 or $10,000. First of all, it's all numbers on a screen, okay? And it can go away as quickly as it came, and it's not gonna change who you are. It's not gonna change anything. Really, it's just a mental game. It's just a game. Like, my son plays video games, and like I played video games when I was a kid, and at the time we thought it was everything, and we would get upset and we would get excited, and now it's just a video game. Well, that's trading. Trading is basically a video game. Okay, we're staring at screens, doing something not so different, and we're dealing with numbers on a screen. And of course, there seems to be more at stake because it also affects the real world, right? Whatever that is. But until you can accept all possible outcomes, accept the possibility that I might lose this money, okay? Once you've accepted that, you can relax, you can be emotionally stable, so that if the trade moves against you, you don't just instantly cut it because you're afraid that you're gonna lose that money. You are detached. You've already accepted it. You've already surrendered. When you're detached, you don't really care that much. It's not that you're apathetic, it's that you realize that there are more important things in life. And you have the conviction, the self-conviction, you know that eventually you're going to be successful no matter what. You have to have that. You have to believe in yourself, okay? And then the detachment comes, and you know, I don't know how this is going to happen. I just know that it's going to happen, and I'm going to do my very best, and I'm going to take the trades when they are presented to me, and I'm not going to be afraid. Even if I've suffered a slew of losses before this, you have to be able to wipe the slate clean after every trade and continue and stay the course and be stoic. Like, if you're not sure what it is to be detached, study stoicism, watch some videos on YouTube. You have to learn this. I can't teach this to you. It takes time, it takes practice. As we age, we tend to become more detached from things that really aren't that important in the first place. So this is a big lesson, and just remind yourself in times when you start to get upset. I've definitely had my fair share where I've been getting chopped up. I trade one way, I'm wrong, I cut it, it goes the other way. I am wrong, I cut it, so that's happened. That's anything that, like I said, you're gonna have things happen that you're gonna think, how is this even possible? Detach from it. Because you can always make more money, you can always come back again. You can have one single trade, and this is something that I always tell myself, I can have one trade that makes my entire career. I can have one trade that wipes out years and years of losses, and as a matter of fact, I have done that. Okay, and when you get that trade, when that actually happens the way you said it would, oh boy, that's going to change everything for you. Okay, so let's talk about apps to use. There's two that I use. One is TradingView, obviously, and the other is X, curated feeds, and I trade on Blowfin. If you want to trade on Blowfin with me, you get some discounts on the fees, and you won't necessarily get discounts. Depends on that, but you'll get the perks of trading on a safe exchange, and of course I benefit from that as well. So I trade on Blowfin. That's the exchange that I use. And again, if you want to learn how to use the exchange and take the trades themselves, watch that video. but TradingView and X are the two external applications that I use. So the first thing I want to just briefly cover is X, and I use something called X Pro. It's pro.x.com, and you can see like you can add columns. Just let it reload here. You can add columns so that it basically tells you, it gives you updates in certain curated feeds. So I can create lists, and I will link to one of the lists that I have. Well, this is an Inspire list that I like to, it gives me some inspiration every day. I might spend 5-10 minutes reading through this every day. This is a trader that I respect, one of maybe a handful that I'm currently following and just seeing what his opinions are without letting it sway me too much, of course. This is my macro feed. This is the most important thing. This is basically the Kobeissi letter. I mean, this is one of my top accounts that I follow, and many people in this space do, and then watcher.guru. But I will link to this list and share it. Walter Bloomberg. It just gives me updates on the economy, and you know, if Powell's giving a speech, I'll get updates from all of them. I don't even have to watch the videos if I don't want. I will check in on this. I will get notifications when they release new posts, because especially with Trump and the tariffs and everything, there's just been so many things going on with that. But this isn't going to help determine whether to take the trade. In a lot of cases, I've already taken a trade when the news comes out. The news, remember, it justifies the price action. So the price action is the king. Of course, there is a context and a bias that we have to create, and we do that with TradingView, with our analysis, our technical analysis. But this gives me a sort of a sentiment check, right? And but this also, using pro.x.com, prevents me from having to scroll through mindless posts that I really don't care for, and it prevents the algorithms from trying to promote things that I don't want to see. I don't have to see any kind of ads or anything like that. I am verified. I do pay the extra for that. Grok is a very helpful feature if you're using the AI to study trading, which you can use it to study anything. But this is really what I look at more than just the straight Twitter feed, and I highly recommend that you do the same. This has helped me a lot. Okay, so that's that. I'm not going to talk about that anymore. Now I want to talk about TradingView. So I use a dark theme because I just find it's easier on my eyes. I don't know how people use the white. It's just too much for me. And of course, everybody's going to have their own personal preferences. You should learn this like the back of your hand. This is covered in depth in my courses. I'm not going to go super into detail on this, but I will say that it is helpful to organize your assets in order of increasing or decreasing importance. So Bitcoin is always important. And you notice I have two of these. One of them is the Blowfin Bitcoin. So you notice that the futures is a slightly different mark price than the actual index price. So this is the actual index for Bitcoin. It goes all the way back. And this is really helpful for just back testing and looking at previous cycles and all of that. Okay. I definitely recommend you use this chart. I do look at the SPY S&P 500 because I want to see if there's any kind of correlation. Usually there is some correlation, but it's not necessarily influencing my decisions. And then Ethereum comes next, and this is the index chart for Ethereum. It goes all the way back to the beginning of Ethereum. And then in this case, I'm studying ETH BTC very carefully. So how to create these charts, I've gone through this before, but I'll mention it here. Okay, so I just backslashed, and then I choose my Bitcoin, and then you have to go back, click on ETH, and then you choose the Ethereum. Okay, but actually I'm looking at market cap, so I'm doing this wrong. So you want to compare market caps, not the actual charts. So you can see if you do, it's crypto cap is what you'd want to filter by crypto cap. Okay, and then once you've selected for both, then you hit enter and it pulls up the chart, and you can add it to list. Okay, so how to add a chart to list? Well, you do it here or you do it here. Okay, add to watch list. Okay, one thing I want to mention about TradingView, that I'm gonna this is gonna be sort of like spray and pray approach, if that makes sense. I'm going to talk about things as they come to my mind. I always set alerts at key levels that I'm interested in. Even if, for instance, I'm in an Ethereum trade right now, I can see the alert lines here. Why would I want one up here? Because this is a supply zone. I want to see what it does when it gets here. I'm currently in a long from around here. Okay. Now, some of these are not really relevant anymore, so I can delete them. So I do clean them up as I go. You can also move them around once you've moved the alert line. So if I want to know if this comes back below 3,800, I don't know that it will, but I want to know if that goes off. It's good to have these muted at night unless you're really actively needing to monitor a trade, which can happen from time to time. But these alerts are really like every time that I'm looking at charts, which I really try to focus on a few windows of time. As you progress as a trader, what you'll notice is that the most important times for a swing trader to be focused on the charts, for me at least, is 6 a.m. and I'm Hawaii time. So 6 a.m., which is 9 a.m. for California usually, and 12 p.m. for East Coast. Okay, so 6 a.m. and then the next 4-hour close, which is 10 a.m., which is currently when stocks close. Okay, and then the next one is the daily close, which is 2 p.m. for me. So those three, and then the one after that usually 6 p.m. So for you it might be different, but there's usually 4, maybe 5 that you want to really, when that happens, that's when you go and you look at the charts. And you're going to understand why in a bit here, because we're going to talk about the 4H time frame and why it's so important to my strategies. So those time frames are, so those times you could literally spend 5 to 10 minutes 4 times a day. That's maybe 20 to 40 minutes. Okay, and that is the most efficient use of the time, because we want to see what the price does at the candle close. So for instance, let me get rid of these here. Alert lines, that's when I'm setting alert lines. So let's say, notice this candle. This is a breakout candle. Okay, so this is telling me what? That it's likely headed back up to range highs at minimum. Okay, so we have an initial rejection here, but you see the 4H close. So when I came to this was a much different story than the hours leading up to that. Okay, so this gives me a definitive strong candle. Okay, that's telling me that we have a breakout on the higher time frames. Okay, and of course that was also triggered, and we will talk about this 15-minute candle here, that was a breakout candle signaling more upside for Ethereum, but this is actually giving it even more strength. And so as a higher time frame trader executing on the 4H and using the daily as sort of the giving the broader view, I want to know what happens at the candle close. I want to know exactly how the candle closed, and in many cases I'll just say, okay, well that's not really of interest to me, and then I won't pay attention again until the next close. And then you're tracking each 4H candle, the most important ones throughout the day. And the daily close and weekly close are very important as well. Those are the most important ones, I would say. But those 4H candles right in the middle of the day, especially during stock market hours, you want to pay attention to those. So again, even if you just know, okay, these hours every day, I'm going to check 5 to 10 minutes, and I'm going to see, did a certain level hit? Did it fill a gap? Did it hit a demand or supply zone? Is it breaking out? And we'll talk more about this. So now, we talked about adding to your chart here. You can arrange this any number of ways. You can modify in the settings. I have different altcoins that I do look at, but again, I'm not going to go really too much into this right now because it's just more complex. And you can see something like SUI, it has not been as clean of a chart because it's a lower market cap. It's actually a tenth the market cap of Ethereum, and that means it can go higher faster. It means it can go lower faster. So these are what are of interest to me. That doesn't necessarily mean that I'm in trades with them. I always like to pay attention to total market cap on the higher time frames, and you will notice here something I didn't mention yet, but it is again in my courses. I'm using the actual TradingView app. I'm not using the website. The app is much better than the website. You can do more with it. You can add windows. So this is the game changer for a swing trader. I have a monthly chart here. I have a weekly chart. I have a daily chart. I have a 4H. I have a 1H, and I have a 15-minute. And if I can add any time frame I want. And then when I do add, what's important is that I color code them the same. So if I make it the same color as these, then what will happen is when I switch assets, then all of them will switch with it together. They'll sync up. Okay, so this prevents me from having to just use one chart and then constantly reload the chart when I want to change time frames. And if you do want to change time frames on one chart, that's fine. That was my method for many years until I realized this hack. I just hit 1W or 1 day or 4H. You learn the codes for that. You can also do it up here, and you can set your bar and set favorites for what's up here. And by the way, before I forget, these are my favorites. This is my favorites bar. Okay, and you can see I have an eraser. I'm often demonstrating things, so you might not need some of these, like the highlighter, okay, in which I can Command Z, you can undo a lot of things, right? This is the brush, okay, so the horizontal ray is pretty essential for drawing ranges, which I will share with you momentarily. The rectangle I use for identifying gaps, okay? Text tool is mostly for demonstration purposes, for just sharing with students and sharing publicly my thoughts on charts. This arrow tool is good for drawing diagonals. Okay, and you can set the settings on these individually, right? So like this color and the thickness of it, if I just double click on it, style, then I can decide whether I want to extend it, what color it is, the thickness of the line, all of that. And so, the settings are really up to you. These are just the colors that are easiest on my eyes. I use a parallel channel. I like this a lot because, sync it with the magnet here. You can use a weak or strong magnet, but it will connect to the lines at the top or bottom. Now in this case it might not really serve me very well because you see what it's doing, but if I hit shift while I'm doing this, then it will actually draw a straight line, and then I click and then I sync it to say the low before the next move up, which was here. Okay, this is a theoretical range that I'm drawing here on the monthly chart. Okay, and it actually automatically gave me my midpoint without me having to do that. So that's easier than having to use the Fibonacci's, which is another way to find your midpoint. And this is also a setting that I have. So I've set these to certain levels. This is my range fibs. So I'm looking at the 0.25 and 0.75 and the 0.5. But really the 0.5 is the most important. But you see how this is complicated using this magnet I'd have to turn off my magnet, and then I'd have to draw that, and then I'd have to basically draw a line and give it a dash. Okay, so that's a little more complex than just using a parallel channel. So hacks like that, you learn as you go. But you'll notice that this favorites bar, how do I find them? Well, you just click them in the side panel here in this toolbar. Okay, and it will bring them down here so that you don't have to constantly go digging for them. So like my long and short position, when I'm sizing up a trade, and we will do some of this, or price range, date range. These are the ones that I feel are actually most helpful, just these four. And some of these are less often used, and a lot of this again is just demonstration, like a price label. I'm just trying to share a level with people. So really the long, short, the price and date range, the rectangle, the horizontal ray, and the eraser, and maybe the brush if you're just drawing some squiggles for yourself, and that parallel channel. So there's maybe 6 of them that I use like very regularly for my trading. Okay, and so once you have the favorites, then you can just kind of like get rid of everything else. You don't have to worry about any of the other tools. You don't have to worry about volume. Why don't we have to worry about volume? Well, it's in the candle. I mean, the candle is telling you, and they could say, well, candles can move up on low volume. That doesn't matter to me for my strategies. What matters to me is where the candle goes and what the wick looks like. Okay, everything is about the candle itself. All the information that I need is in the candle. So why should I complicate things by looking at something like RSI or looking at something like volume. It's another level, it's another layer of information that can potentially confuse me as a trader. Okay, so total market cap, you just type total, it'll come up. Okay, and by the way, if you do want to find indicators, how do you find them? Well, you start with a backslash, and then it's gonna work. I can't even right now. So for whatever reason, I'm not. So either way, it doesn't really matter because we're not looking for indicators, but it's the backslash. My keyboard is malfunctioning right now. You see indicators will pop up here. You can also add indicators in other ways on this chart. Okay, you notice there's the alert button here, indicators. Okay, so you see it's showing the backslash there. And you have favorite indicators. I mean, some of these were just here already. Some of them I played with over the years and just didn't find any real value in them. Because again, I can see the same information in the chart, in the candles, without having to go through the trouble. Many indicators, you have to understand, they're lagging, which means that, like, for instance, moving averages, even the EMAs, right, which are more weighted towards the recent price action, even those are lagging. Okay, so by the time something like a crossover or something has happened, it's already too late. It's already made a big move. So we want to try to catch it as it's happening, right? And so that's why I really discourage using, I don't even know why that's there. Some of these I really don't use a whole. You can see it's all EMAs, maybe the 200 simple moving average, okay? Because institutions use that for, like, for instance, for daily charts, right? And I could see, look, you can notice how total market cap bounced off of that there. It holds as support generally, but you notice, like, if you're waiting for the breakdown of this to get out in the last bull market, well, where would you have done it? Maybe here, okay? And by then it's kind of too late, right? So it's lagging. So I'm just not really going to talk about it. I might mention it occasionally sometimes in my analysis, but it doesn't play a big role in my decision making as a trader. That's just plain and simple. So that can save you hours and hours of trouble just by itself. I promise you. Just trust me on this one. Trust me, bro. So total 2. Okay, this is crypto total market cap minus Bitcoin. So this is just the altcoins. It includes Ethereum. And so that can give you a general sense of, like, are we in an alt season? Are we headed into an alt season? I mean, it's been trending up, but it's kind of staggering right now. It's still below its 2021 all-time highs, okay, which you can label these. So this is just basically using the horizontal ray with a magnet, finding the top there. Sometimes I'll use the wicks, sometimes I'll cut off the wicks. In this case, I'll use the wicks. Wicks are valuable price. It's information about the price that you want to consider. But in certain instances, like finding value areas, we don't really use the wicks as much because we want to know where the majority of the price action is contained. So I can add text to it, right? I can change the size, the color, all of that. Bitcoin dominance I'm focused on right now. Why? Because this is the market cap of Bitcoin relative to everything else. And if this drops, then that means that altcoins are going to start to regain their dominance. And that's actually what's happening. And what do you notice is you'll see me kind of go to different time frames automatically. It's an automatic impulse. Notice on the weekly, it's giving me less data, but it's less noise and it's actually clearer, right? Now, if I look on the monthly, what do I see? It looks like it's going down, doesn't it? It looks like it's breaking down from this range. It's still early in the month. You can see how much time is left in that period. But on weekly is giving me a pretty clear picture that it seems to be rejecting at range lows. And this candle right here, this is what we call a standout candle. So I'm just introducing this concept. A standout candle stands out from everything else. It's that simple. It maybe engulfs. By engulfs, kind of think about swallowing. It swallows all of the candles around it. So this swallows like 10 or 15 candles in a single shot. And it's the biggest candle actually since the initiation of the uptrend. What do you know? So you see here was a standout candle showing the potential for a lot more upside. And even though it was coming into sort of range highs, it it was what we call a Maribozu candle. There was no wick to the downside. There was no wick to the upside. It went straight up in a straight line for that period, that week. And here we have an almost Maribozu, no real wick here, not much, right? And engulfing. So engulfing engulfs the candles around it. So this candle is an engulfing candle. It engulfed this candle, this candle, this candle, and this candle, okay? And so here we have that. That's a standout candle. So that's giving me more than any volume or RSI or any other indicator ever could. It's telling me Bitcoin is ready, not necessarily to go down, but it's ready to give the stage to altcoins, because altcoin dominance now, their money is rotating, is what this is sharing with me. Okay, so what does that mean? That's why I've been so focused on ETH lately, because I believe ETH is going to run back to all-time highs, which it has been doing since 2200. And also, this is giving me the signal. It's telling me maybe trading Bitcoin is not going to be as profitable right now for you. Okay, so this is more advanced trading, but it's giving me a focus. So I'm actually fully focused on Ethereum right now and not Bitcoin, even though Bitcoin may give a long trigger for me. Usually Ethereum is giving me a long trigger at the same time, but Ethereum is likely going to go up higher because of this chart just by itself. And then if we look at the ETH BTC chart, this is comparing one asset to the other. So for years, Ethereum's market cap was moving down while Bitcoin's market cap was moving up or not moving down as sharply, right? That's what that means. It doesn't necessarily mean that one is moving up and the other is moving down. It just means that relative to one another. So now relative to Bitcoin, you notice it's starting to push up pretty strong here. It's actually broken its downtrend, and very clearly, and it's changed market structure. So what is market structure? Study market structure. It's a series of higher lows and higher highs, and you can find this on multiple time frames, and it's easiest to spot really on the daily. But you see, notice right here, and you can see this is why I'm using this type of tool. Okay, higher high, higher low, higher high, higher low, maybe. Okay, so market structure is intact. For the first time in years, it's starting to move up. Now Command Z, I'm erasing all of it. Okay, I'm using something called Cursor Pro, and this is just again for demonstration purposes, so people know where my cursor is. And there are settings so that you can have like different lines and styles for where the cursor is, but it's just very clear for me. So that's basically the chart aspect, right? And why I use the different time frames, why I have these different assets. Sometimes I'll go through and I'll just delete a bunch of charts that I'm just not really interested in. Like right now, I'm not super interested in ENA because I just booked profits on it. I'm kind of more curious than anything, but you notice I'll just move it down lower in the chart. So USDT dominance, you might look at this, but the thing is, it's just like fiat supply. It's constantly increasing. So this is going to gradually grind up. And what we're looking for is a sharp move down, which happens usually in a bull market. Why? Because people are moving out of stablecoins and into cryptocurrencies. And then once this starts to bottom out and show signs that it wants to move back up, well, that's a sign of profit taking. That's a sign potentially that the top is near, or that there's going to be a pullback, right? But I don't rely on this as heavily. Okay, so what's most important is the chart itself. That's it. And Bitcoin's chart is the most important. It should be given the top priority above everything else. Okay, so now let's look at Bitcoin's chart. And notice here, everything is resetting. All the time frames are here. And I've been paying attention. I have different objects in my object tree. So this is the object tree. And you can actually arrange these into groups. You can organize them. You can move them around. So if I click on this, I can add it to a group, and then I can label the group, and if I want, I can make it disappear, and I can revisit it later. So I highly recommend you play around with this. But I was studying, okay, what is the time between halvings and the peak? Here it was about 525 days. Here it was about 553 days if we move to the second peak. So far it's been 476 days. Does that mean that I know exactly when the top is going to be in? No, but I have a general idea of when it could possibly be in the coming months. Okay, but that's not all I'm going to rely on as a top signal. It's just something I'm looking at. Okay, so object tree, very helpful. You can see like certain things I have to go back and kind of clean up. So this was a 2021 to 2024 range, which we've now broken out of. Okay, so this was going off of the previous high. I looked at this, I used this for months, and you see when it finally did break out. Okay, and there was actually a breakout of the breakout. Okay, diagonals can be helpful in these cases. And we'll talk more about the diagonals, but it doesn't necessarily by itself. A lot of the times we're looking at multiple factors when making decisions. Always remember that horizontals are more important. They have more weight. Why? Because they're less subjective. Okay, so here I'm going off of the initial high. When you're drawing ranges, it's important to go off of the initial high where it initially rejected. Because a lot of the times, if it does come back up and it deviates, this is called a deviation, or I refer to it as a whale breach, where the whales will push the price up, liquidate a bunch of shorts, and then drive the price down because they're gathering the liquidity to be able to make the move down. Okay, but that range, really the range highs are here. So I want to know when the price pushes beyond that initial range highs. And you can see in this case, because I'm looking on higher time frames, I am lined up with a wick, but that wick is also where a lot of that price action is contained, where the candle bodies are closing, as opposed to this wick here. Although it did run both of these wicks, okay? So identifying the ranges, again, this is just using the horizontal ray tool. And I might start by using a monthly or even a 3-month chart. Okay, so you can see the high was actually this month, March of 2021. And the low, the initial low, where I saw that initial reaction from was, I'm actually using the set 2017 high here because it lines up nicely with this. But in this case, I might have looked at, you could have used this as the low if you'd have wanted. And then the mid, and then in these cases, you have the 0.25 and 0.75, but they're not as important, these levels. But if you want to, then just set your fibs so that you can identify them. Okay, so all I did here was I created a template, and you can save your template, and you can just change the numbers and change the colors, and then save it as a template. Save as, and you can see I have multiple different fibs, but I don't use the fibs for anything beyond that. I don't really care so much about the 0.618, 0.7. I don't care. It doesn't matter to me. It doesn't help me. Some people, that's all they use. That's fine. No problem. Maybe it works for you, but ranges work better for me. Okay, so it's kind of a version of it, right? But now, what do you notice about this? It's not really relevant anymore. Okay, so I'm going to get rid of this. Always clean up the charts when you can. Okay, this was something I was actually looking at. Notice it came up to the 2 level, like it literally wicked up to this. I drew it to here, and this was an extension, right? It came up to here at one point. Is it a coincidence? Maybe. I don't care about this anymore. I'm deleting it, okay? So this is how you work within an object tree. You know, sometimes you want to hide things, but you don't want to have to draw them again later. Okay, so here's another range. This was the 2024 range, and we've broken out of that range now, so it's not, and it hasn't come anywhere near revisiting it. So I'm going to actually delete this. Well, this is good. I'm getting some practice here. Or I'm getting to clean up my charts. And it's very feng shui, you know. This is really like, again, the less information you have to deal with, the better off you are. So now with Bitcoin, with these strategies, I'm not trading on the monthly. I'm not trading even on the weekly, but it's giving me context, right? So what do I know by looking at the monthly if I've never looked at a Bitcoin chart? Well, it's been trending up since when? Since January 1st of 2023. But notice it's kind of losing momentum here, okay? It almost looks like, we call this a 3 drives pattern, where it pushes up higher, but it's not pushing up as high as it did before. So here you see this was a pretty strong move. And I can actually measure that move, and I can see that it pushed up 347%. But then from here, from this low, when it corrected, to the next high, that was only 120%. So that was less than half. And then the next high, which is debatable if we're really in a correction right now, but that's only half that. So what is that telling us? Momentum is slowing. I don't need RSI to see that, although it probably will tell you that, right? That's giving me some context, but we're still in an uptrend. So I have to assume the bias is still up until proven otherwise. What would be the proof that things are going to shift dramatically? It's standout candles, and specifically on the 4H, because even though the weekly is going to give you a stronger confirmation. On the higher time frames, you're going to have more confirmation of something after that candle closes. Like for instance, this candle here for Bitcoin was definitely a sign. Well, this one actually was a warning shot. It did move up higher, but then another one. At this point, if you're not out, you're going to suffer through more drawdown, because you can see these two candles right here are standing out from everything else, and they appear, notice there was a sea of green, very small red candles. It's just the size of the candle, sheer size of the candle bodies. Okay, no wicks really on these, and engulfing all of this. It's like wedged between it all. Okay, even just this one by itself would have been a sign, maybe not to immediately get out, but on the bounce to maybe start selling some spot. Okay, so the weekly candle gave me that information, and then it did come down, it did come back up again, and the trigger down here would have been a little different on the lower time frames. But it's all about candles on different time frames. Always check different time frames. You'll find information. Price is fractal, which means these patterns are repeating on the different time frames. So even though here we don't have the same candle set, what we do notice is these two candles in 2 days, it made a bigger move than it had made down in the entire bull run up until that point. So even here, here it was, you could see, but the wicks, notice the wicks. So what are the wicks telling us? Wicks in a candle tell us that there is buying pressure. So the buyers are stepping in, they're bidding. So because the bids are absorbing the sell pressure. So the contrary is true. So if there's a large upper wick, that means sellers are stepping in and absorbing the buying pressure. So if we see big long wicks up here, which we don't really see for Bitcoin in this case, but what we do see is that 3 drives pattern. You can see 1 drive, 2 drives, 3 drives, actually 4 drives here, but the momentum is slowing. It's not moving up as fast. The RSI is probably slowing. Everything is slowing down here, even though it's still pushing up. And so this is very deceptive. But what do you notice here? This is actually the sign. This was a sign of a deeper correction and a potential sweep. When I talk about a sweep, I mean a sweep of previous levels here. Okay. So a sweep means coming down lower. We will get into this in more detail here, but I'm just giving you the overview of the candles themselves. Okay. This was a sign of potentially more downside, even though initially it did push back up. We call this what? A dead cat bounce, where it puts in a lower high on the time frame here. So in this case, on the daily time frame, there is a lower high here, and you can see this is sort of a lower low. Okay, but it's a corrective phase, and so some people will call this sort of a bull flag. The benefits of this tool, the parallel channel, is that you can also draw diagonal ranges and value areas. So this is sort of a bull flag here. And it did sweep these levels, but it quickly reclaimed. And so a sign of more upside to come for Bitcoin. But now in this case, it happened again, not too much higher. Now that wouldn't have been by itself the sign to sell, but what maybe would have, well, if you really waited all this time to sell, you could have sat through all of this. But then notice the standout candle right here on the daily. Okay, at this point, now I understand, it would have been ideal to sell up here, right? 60 something thousand, but this candle right here, this is kind of like your last chance. The boat is leaving, right? But now if we drop down even to the lower time frames, like the 4H, so the next lower time frame for me is the 4H candle. Okay, so I'm looking at, and remember, you might impulsively want to buy or sell before the 4H candle closes, or the daily, or the weekly. But just remember, a lot can happen in that last, say, 10 minutes of a candle. And oftentimes that's actually when the most happens. So it can completely reverse. You can have a nice long wick that is set in 5 minutes. So just keep that in mind. Wait for the close. Wait for the close. Don't be impulsive. Now notice with Bitcoin, okay, I'm just trying to find the first top here. This is in March of 2024. We'll start, well, no, just for the sake of consistency here, we'll go back to the previous bull run. Okay, but you can actually do this in any instance where there is a reversal, a key reversal. You want to look for candles that stand out, that give you a signal of what is potentially to come. I spend every day doing this. I still do this every day. I am looking at the current price action, and I'll go back in the past and look at that as well. So you can see, there's more candles now, right? There's more to deal with. There's more to look at, and it's not as obvious on the lower time frames. So like right here, what the hell is this? Okay, so that is kind of an anomaly, right? Even though there's that big long wick, what does that mean? Does it necessarily mean it's going to push up higher? Well, what is the context? It's been pushing up for so long already, and we haven't had a candle like that the entire bull run. So it did come down lower. Okay, so already I'm thinking, this is starting to show signs that you can see. This is what I call yin-yang price action. So you have the yang, that's the active green moving up. The yin is the red moving down. In this case, black and blue. Okay, that is a warning shot for me. Okay, so even though it did push higher, I'm not going to instantly necessarily sell right away. But if it starts grinding up again, you better believe I'm selling off spot positions as it comes back into these levels, because it may or may not come back above. That may be the top. Okay, and you can go back to any cycle top and you'll see the same thing. Okay, even if we go all the way back to 2017, which I'm not going to do, you'll find some key candles in some key areas after a big strong move that's been going on for some time. And that, even before it puts in a lower high or lower low, whatever it is, that is going to give you the most accurate signal if you're paying attention. Okay, so the standout candles, and it's less so in, say, the stock market or the Forex. Why? Because they're bigger markets, and the smart money is less visible. But when a whale is selling or buying, or a series of whales all at once, it moves the price a lot. Okay, and that is telling us this is why the standout candle is so important in theory, because it's giving us a signal that these are the market makers. These are the ones that are determining where the price is going next, because they have the most capital, like it or not. Okay, so this is why we focus on the standout candles. Okay, so they were actively selling here. They balanced out this price action. So the sellers and buyers are in balance here, are actually even more sellers than buyers. Okay, so you can see what happened after that. It came lower, it went higher, but it's sort of, if you had sold, let's say you had bought Bitcoin in that previous bear market somewhere down around, I don't know, 10, even to 20K. Well, if you sold anywhere in here after this signal, you're looking at between 50 to 65K, something like that, right? That's where they were unloading. But there were key candles that were showing you, like this one. This one was really the main candle, where if you didn't see it here, you definitely should have seen it here after the breach. And we call this the up thrust after distribution. If you want to study the Wyckoff method, that is also helpful. Study the schematics, but it's not absolutely necessary. What's important here is that the price breached above, but it failed to break higher. And we call that a displacement, where it breaks, the candles really strongly break above and hold above. The candle closes above. So we have the candle opening and the candle close. In this case, candle opened here. Okay, it wicked up, rejected, closed here. Even though there's a wick here, doesn't matter, because the size, the body of this candle is telling us something. It's engulfing all of this. It's like a whale coming in and eating a bunch of krill. Okay, so those whales that were in control, they were sellers, and that was after 3 drives here. So are you going to really sit around and wait for more of this? It happened here, and it might seem really obvious, right? And there were other signals here as well, which we'll talk about. So for instance, a breakdown from this value area, which you could say the value area is what? Might as well get into it now. The value area is like a range, but it's where the bulk of the price action is contained for a period of time. And it might be horizontal or it might be diagonal. So I'm going to identify it here. And notice this candle broke straight through it. It displaced below it. It closed below. Okay, so now we're going to be able to use this on any time frame, and you would probably see on the 15-minute time frame a 15-minute candle that broke strongly through and gave you a short trigger. So when the price is in here, we call this fair value. This is like retail, going to the store, going to Walmart. You're getting Walmart's prices, but Walmart actually gets discounts and premiums. So this is what you would call a discount. Price has been discounted, but in this case, you're thinking, well, Walmart is actually dumping their supply. So that means that this is not good. So this means that we should also sell. Okay. So this is part of the breakout strategy, which there is a free breakout course that goes into more detail, and there's also a paid course if you buy all the courses on my website. But I don't care if you buy it. It's fine if you don't have the money or don't want to. This is a value area. It's not necessarily the same as a range. It doesn't necessarily include the wicks. I'm not looking at the first high. I'm looking at where most of that price action is without trying to keep out as much black space as possible. I don't want black space. I just want candle bodies, and I want a cluster of them. Okay, so like for instance, this is a value area. Okay, it's not as clean, but it is a value area. It did break down here. Okay, but it didn't give much here. It had already broken down from another value area. Sometimes the breakdown can be actually, it can be moving diagonally down, and then it can break down even more, which it did here. So there's the breakdown from that value area. Okay, so these are just different value areas. It doesn't have to be horizontal. It is clearer usually when there is a breakout, okay? But so the key element to understand is, what is a standout candle? It stands out. It's bigger, usually much bigger than all the candles around it. And what's more important than that is that it's occurring at a key area. Now, how do I know that this is a key area? Well, why? Because the momentum is slowing, because it's not putting in, making higher highs, but not too much higher. And so this is, even though Bitcoin is in what we call price discovery, where it's finding new highs, there's still key areas. Well, it's a key area because this was the previous high, and then this was the previous high. And so if it's near that area and it's rejecting from that area, then that's a sign for me. But now, in terms of like a sweep, for instance, okay, so a sweep is like so these are actually, each of these you could consider a type of sweep. Okay, and this is where we get into the idea of, say, the Bart Simpson haircut. So notice I'm using my magnet and my horizontal ray. This is something you need to do so that, and this is where you might set an alert. Let's say that price comes down here. You're thinking, well, if it comes up here, I want to see if it's going to break and hold above, or if it's going to break back below. If it breaks back below, that's a sign of potentially more downside. So in this case, you notice this is what I would call a Bart Simpson haircut, where it sort of consolidates, breaks out, consolidates, but doesn't follow through, stumbles around, and then breaks down. So there's the haircut, right? And in this case, this might have been a short trigger, but of course it did come down. Now let's set up a hypothetical trade. Okay, when you're setting up trades, there's so much to cover here. I'm just trying to give you as much as I possibly can. When you're setting up trades, you want to think about, where are the stops resting? That's where I want to enter. Okay, that might not make sense to you at first, and that's fine. But where are the stops resting here? Well, ideally you enter somewhere up here, but that's what we call an anticipation trade. It's not a responsive trade. A responsive trade is, or responsible trade, maybe some would call it, is waiting for a clear signal. So up here, what do I notice? Now, I might not see this on the higher time frames, and unfortunately I can't drop down to the 15-minute on this because it's so far back in time. But what you would notice in the 15-minute is you would try to find, on that lower time frame, you try to find a value area, and then you try to find a breakdown from the value area, and it's probably somewhere in here, right? So we're trying to enter, but we're taking actually not a long, we're taking a short position here. Let's just say that it did break down, gave a clear breakout candle, which we will go through examples of this in more recent time. Okay, in this case, I probably would have set my stops somewhere up here. Okay, because at this point, if it comes back up here, some people, traditional trading wisdom, you need to ignore traditional trading wisdom because it's going to tell you you know, put your stops above here. Well, at this point, if it does come back up here, you're already wrong. It's where am I wrong? It's not, and you don't want to have your stops too tight, right? Because then you get stopped out when it does, if it does come back and revisit. But you want it to be far enough away that it's, and you want to also size up what is my risk reward. Okay, so in this case, it's a 1.29. But I want to target at least kind of the mid of this section here, from this low to this high. So this would be my range that I'm looking at. And let's just say, use this value area tool so I can identify my mid range. And I'm setting it, my profit level somewhere down here. Okay, so if I set it here, that would be almost a 3R. So that means that if I risk $100, if I'm wrong, and you use your position sizing spreadsheet, it'll tell you what the size is. If you put in your account size, you'll, again, if you want to learn this, for those who haven't already, learn it on the Blowfin video. You put in the account size, it'll automatically calculate the values based on how much you want to risk, whether it's 1%, 2%, 5%. So let's say it's telling me to put $1,000 in the trade, I'm risking 100, right? I'm only risking, say, 1% on the trade, okay? I don't have super high conviction. That means that for every one of these, I'm gonna gain $100. So if it comes down all the way here, I'm gonna make $300 or $277. If it comes up here, I lose 100. So I'm already accepting the outcome. So in this case, it didn't quite come all the way down. Okay. Now, would I be taking profits here? Most likely. Why? Because I'm seeing yin yang price action. I'm seeing these three candles engulfing this big strong move down. There's failure to follow through, and at the same time, what do we call this? Well, this is a sweep, actually. So this is where we're getting into sweeps in different areas. So we had an initial sweep or breach here, failure to displace and break above, so giving me a short trigger. But now I'm looking at lows. I'm looking at sort of previous lows and like looking at daily or weekly lows. And here you can see there were some lows and they got taken out, which means that the price came below. So a lot of people who took longs from here and had their stops somewhere down here, over here, they got taken out. But then price quickly moved the other way, which means that buyers were stepping in. So at this point, I'm going to likely cover my short and maybe even take a long. Okay, so maybe I didn't get that full 3R. Maybe I only got, maybe I only got like a 2R. Fine, no big deal. Okay, anything above a 1R is great if you can get it. Because why? The higher the R multiple, the less winning trades you need to have to be profitable. So if you average 3R on your trades, then you only really need a quarter of your trades to be profitable in order to actually be above break even. Okay, it's roughly that. I don't know exactly how many trades it is, but if it's a 1R, then you need to have half your trades in profit in order to be a break even trader, just to be break even. So you want above a 1R if you can. So you're always shooting for that. And if it's not giving you that risk reward, then it's not worth taking the trade usually. Okay, so this here is, again, let's take a long now. Okay, so I'm gonna wait. I waited for this candle to close, this 4H. And I'm gonna set my stops. You know, again, this is a matter of preference. You could set them down here because it may come back down and do some sort of a double bottom. But I feel pretty good about the strength of it, so I'm actually going to put it somewhere over here, maybe 4.5%. And then I'm going to run it back to the highs because I think it's going to likely come back to the highs of this range now. And it did. And I put maybe I only put a 75% take profit level, which I should talk about this in the Blowfin video. That's called a partial take profit. That means I take 75% here, and then I want to see what the rest does. And it comes up here, but I don't take profits because I think, oh, it's going to go to 100K now. But it doesn't. It comes back down. It comes down here. But then I just close out the rest. And I always use market buys and sells. I don't worry about the fees that I pay because limits, a lot of times in crypto, a fast-moving market, they just never fill. Okay? And that can be very frustrating. So, but either way, maybe I averaged a 3R on this trade. That's a great trade. Okay, and I'm done. Okay, I'm out. And then what do you know? Once again, it deviates, comes above. Same pattern. Notice, similar to this, similar to the first sweep here. Okay, and in this case, it's just coming back in the range. And now, targeting range lows again, same trade. So this is all day you can do this in a range-bound environment like this. Many people believe that range-bound trading is very difficult. Well, that's only if you're basically, if you're not trading at extremes. This is what we call trading at extremes. Trading when the price is at a discount, which is down here or up here. Now, you're not always going to get in at the actual extreme because you don't necessarily know right away what it's going to do. But notice the price action here. And this is something you can only learn by watching and studying and through experience. So I'm noticing how momentum has slowed. There's no follow through. The candles are engulfing these candles. It's putting in a lower high, another lower high. It's breaking down. So I'm entering along and I'm a little bit more aggressive here. And I'm targeting the lows as a 75% target. It's always helpful to leave a runner, which means leave some of the position. Even if you're happy with a 4.76R, you never know how low it's going to go. Now you could have, this is where the question of where do I set stops to break even? For me, after the first take profit level is hit. So if you're being more conservative, your first take profit might be here. Maybe that's a 25% take profit for you. And just remember, as a beginning trader, it is helpful just to take profits because it builds your conviction, even if it's a small amount of profits. It doesn't mean that you need to snatch profits and be completely out of the trade immediately when it moves down. But if you just had a 25% take profit level at the mid, that's one area you could take profits, a mid of a range. So in this case, actually, that would be somewhere around here, right? So that's still a 2.4R with this stop. Now you might be tempted to say, well, the less the stop, the higher the R multiple, right? But that's leaving you very little room for error in the event of a spike up. And like I said, the more risky the asset, the more you're gonna have, the wider stops are gonna have to be. But you can still do just as well because it will move that much more. Okay, but you need to be mindful about your stops. And you're gonna have times where you just, especially early on in your trading, where you just didn't set the stops appropriately. And you have to get a sense about these things. You have to develop a spidey sense. It comes with experience. So taking profits is never a bad thing. You should never regret it. Never feel like, oh shoot, I took profits too early. There's always going to be more opportunities. This should be your mantra as a trader. This is the most important thing to remember. There will always be more opportunities. They will come at sometimes the seemingly the strangest times. You won't expect it. Just like all the good things that happen in your life, okay? Just be open to receiving when it does happen. But the point of this is to say that once you first take profits, that is when you want to set your stops to break even, okay? Either that or the trade is just insanely in profit and you haven't taken any profits and you're just riding it because you feel like it's really going to go lower. It can't hurt to take profits though, right? Because let's say that you're riding this down and you're thinking, wow, it broke down from here, it broke down all the way down here. It's going to just keep going, okay? And then you hold on to it. Well, I mean, you might hold on to it for a few weeks. I mean, in this case, right, you would have done really well if you'd have just continued to hold on to it, but that's not always the case. And most of the time it's more range bound and not trending. That was actually a rare occasion here. Had you taken this short from up here, had you done it here or here, you would have eventually gotten stopped out. And it's frustrating to watch trades that are insanely in profit to go all the way back to break even. Trust me, you're going to do it a few times and it always hurts, okay? I've definitely done it before, and that's how you learn. It's a muscle that you have to exercise. It takes time to learn this, okay? But it can never hurt to take profits. It builds your confidence, especially early on, okay? So I'm already covering a lot here. This is a lot of information. You might need to watch this a few times. That's fine. No problem there. Okay? And it's okay to ask questions too. It's okay. But you notice how these lines on the chart really do help me. They help me to understand. Because let's say I'm on my phone, which by the way, I highly recommend that you have trading app on your phone and also learn to use it on your phone. Because there's going to be times when you're on the road, an alert goes off and you're like, why the hell did that alert go off? Oh, well, I had a line here? Why did I have a line here? Oh, that was a previous high. Oh, it just broke through the high. Because on the phone, it's not going to share, you're not going to be able to see as much. You're going to see a narrow screen. But if the alert goes off that you set at say 6 or 10 a.m. or at the candle close, you set an alert, right click, add alert. Okay, you can do it. I usually do only once versus every time when it's crossing. You can do any kind of combination here, but just crossing once, create, okay? And then I've set the alert, I forget it. I'm not interested until Bitcoin comes back to this level. I'm not interested in all this, right? I'm not in a trade, right? And then it does, it comes above. Oh, what's the deal? I don't know what I'm looking at. If you leave the lines and the ranges up on the chart, then you'll know when you go to your phone. So it's like a preparation that you do that will pay off. So you don't always need to be there, but you can be monitoring it even when you're traveling. This is the beauty of trading, is you literally can do this anywhere in the world. It's helpful to sit down at a computer at certain times in the day for certain days, but you might be able to go a week or longer and the levels are just sitting there and you're just waiting for them to hit. Okay, so that's a key area that I would want to see hit. Another thing that I would be interested in is, okay, well, if it comes, now this is where we start getting into supply and demand, right? Supply is what? Supply is where the price tends to cluster, but then it rejects. Okay, so it doesn't stay there very long either. That's the thing, is there might be a consolidation, but it won't be for long. Okay, so this is where I use the rectangle tool, because I'm actually using candle bodies and I want to identify the candles. In this case, I want to use the candles down. Okay, I'm actually focused on a few main candles here for my supply zone. So this is actually the supply zone. See these two candles? This is what I'm most interested in. And the middle of that, there's a setting in this tool to be able to have the middle line. Definitely want that for a number of reasons, and we'll talk about that with the gaps. You want your middle line, and you can just adjust it to your liking. But this is what we call a supply zone. Price tapped into it, and for the first time here, and now it's rejecting. And so now what I want to be mindful of is if it comes into it again, I want to see if it rejects again. And it may not initially reject. It kind of did here, but then it pushed above. But then you see how it's stumbling? This is a sign of a potential reversal happening here. But I know now, because why? Because it's a key area and it's a previous high as well. Okay, but sometimes supply and demand zones, they'll be revisited months or years later, and there will be a reaction from that level. So you need to learn supply and demand. So for instance, after a strong move, we call it the origin of the move, either up or down. So I can already tell you where is supply going to be on the way back up for Bitcoin. Well, there's one level here. Okay, and I can extend this all the way to the right if I choose to. There's another level here. Okay, and it's kind of this whole area here. It didn't stay too long. Okay, so now what this means is that if the price comes back up to this level, say months or weeks later, there could be a rejection initially. Okay, so let's just see, just for the sake of, let's see, what did Bitcoin do when it did come back? Okay, here it actually was, in some cases, this zone can be front run. So this actually, it sold off before it hit the zone. But you notice there was at least a consolidation, and it looked like it could have broken down, but it actually broke to the upside. So it doesn't necessarily have to reject when it revisits the zone, but another zone we had was here. Okay, so again, some consolidation, and actually it did ultimately reject from this zone. It actually rejected pretty strongly. So that was the second phase of that bull market. Sometimes it will move through one zone and up into the second zone, and that's fine. You have to expect that possibility. So it did move back into the supply. It did breach above, and you have what's called a whale breach and a sweep. And the sweep, usually we see wicks, we see quick price action, we see yin-yang price action. Here it was yin-yang, right? Here, same thing, Bart Simpson haircut, strong standout candles breaking down. This is already giving me a bias of a reversal. It's not showing strength here, and it's already in a key zone. If this was happening anywhere else, I'd say, well, it doesn't really matter all that much. But it's happening in a key zone that I've identified as a supply zone. Okay, so there's two zones that are most important to me as a trader are supply and demand, and they're called by different names. Some people call them order blocks, you know, the smart money concepts, whatever. But it's supply and demand. It's very basic. Auction market theory, study it. Okay, that's one. The other zone is fair value gaps, which are gaps, basically, is what I call them. And that's an inefficiency where the price moved very quickly in one direction and it wasn't countered. Okay, so that means there's no wicks. Okay, so we'll talk about that. Let's do that now. But I'm gonna move forward to the current price action because this is where I can really drop down to the lower time frames. You understand I'm covering a massive amount of information, and I'm doing this. Well, first of all, I have very strong Mercury placement in my chart, so that really helps me. But second of all, I've been doing this for so many years now, and I've been teaching it for so many years that it does come quite naturally to me. So don't be overwhelmed. If you need to slow it down, watch it halftime, that's fine. But I've taught gaps many times, and if you want to learn something, you really want to learn it, master it, teach it, right? What's a gap? A gap is where you have a strong move down one candle and it's not countered by the candles around it. By countered, I mean the wicks don't cover that. So if we look at this here, and this is where the rectangle tool is also equally helpful to supply and demand zones. Notice the bottom of this wick and the top of this wick. So we need 3 candles to identify a gap. And you can do this on different time frames. They're stronger on the higher time frames, right? So the weekly or the daily usually is what I'm looking at, but sometimes I'll use a 4H gap. And there will be more gaps on the lower time frames. That's just how it goes. But here you can see there's a gap that's formed because it's just a straight body with no wick countering it. Okay, so why is this important? Because usually those gaps will be filled. So in the stock market, the gaps are very obvious because there's just a literal gap, right? There's no actual price in there. They call it gapping up or down when the stock market opens up higher or lower than the day before. In this case, we don't actually have, the market doesn't close. So the gaps occur through these quick moves. So you can think of it as overeager participants either buying or selling. The price has to usually revisit. It doesn't always do that. Most of the time it will. And if it doesn't happen right away, it may happen months or years later. So we want to pay attention to these gaps. So for instance, you see this gap did fill. Okay, it did fill and it did push beyond it. And then you see what's another obvious gap that we can identify. You should spend time every day for a couple of months looking at gaps. Notice this candle, there's no lower wick on it. And then the next candle, here's the upper wick. Okay, so I'm connecting the wicks from the adjacent candles, and that's giving me the gap in the middle. So this strong move down is telling me that gap's likely gonna fill, and it may fill and then go lower. But the reason I have this middle line here is because a lot of times what happens with gaps is it doesn't completely fill if it's trending in one direction. So in this case, let's say it was trending down and continuing to go down. Well, it actually did fill to the mid and a little bit above that, but sometimes you'll actually see it wick to that mid and then reject. So that's usually where, if I'm looking to get on the trend, I might enter here more aggressively than say wait for it to come all the way back up here. So it may not fill the entire gap, but it will at least usually fill some of that gap. Okay, so another gap we have here. Okay, and this gap did also fill. And not only did it fill, but you see this candle here displaced above it. So you have an engulfing candle, yin, yang, and you have it where? At a key low. Okay. And how do I know that's a key low? Okay. So I'm covering a few topics simultaneously here. So we have a range or a value area, let's just call it a value area. It's the same thing. Just looking at the bulk of the price action here. See, I didn't hold my shift key, so it's not as clean there. So I'm going to do that again. Shift, click. Okay, now what's my range? This is the low. Why here and not here? Well, first of all, this is where the initial bounce was. And notice how it bounced straight to the mid. I didn't draw the mid, it just happened on its own, right? Okay, but second of all, that's where the bulk of the price action, going back to the beginning of this range, was. Okay, so this is really our range or value area. Okay, and so it did deviate. This is a breach. This is a Bart Simpson haircut on the weekly time frame. Okay, and on the lower time frames you'll get more signals here, but it's less noise on this time frame. So this by itself, and notice also, what do you notice about this candle? It's bigger than any other green candle the entire bear market. See that? So yin yang price action, reclaim of a range. Now, could you have longed here? Yeah, but would you really know? Did you have any evidence supporting that? No, but here you did. Okay. Okay, so that was actually a trigger to go long, and to go long into spot, not necessarily on high leverage trade, but if you had a long, actually I did long. I longed from somewhere down 16 to 18, I think. But if you longed here, right, and you held this, and you waited for what? A sign of a reversal of the trend. What would be a sign of the reversal of the trend? Well, a big, strong down candle, okay, that countered a lot of up candles. I mean, after all, that's kind of what we saw here, right? These, actually, there was a series of them. It's not always one candle. I mean, here were two, but here was, like I said, there was one here, take your pick, right? But did we get that really? I mean, not really, right? I mean, this candle here, that was a strong candle. That could have maybe faked out some spot holders, right? But it was also, there wasn't follow through on that next week. You see and so, you know, a range was put in here, and then it made room for another leg higher. So, but even had you sold, let's say you sold somewhere on the bounce here at 87K, well, you could have always gotten back in if you were wrong, right? But that would have been a big move from 20 to 87K, right? That's at least over a 4x. Okay, so that's just showing how you can trade on the higher time frames. But notice there was a gap here, and notice even right here, that gap did fill, not all of it, but notice that candle did give, even if you had missed that entry, it came down into the gap and then it swept. And on the lower time frames, so what I do here, if I want to freeze it, I go replay mode and I go to that point. That way, if I want to drop down to the lower time frame on that chart, it's not going to take me all the way back to the beginning. So this is a hack for back testing, okay? Just do replay mode and then you can change the time frame once you've selected the area. Okay, so if I notice here, okay, where was my range kind of? So this is, and like I said, price is fractal. So actually this was what? This, we have the gap, so we know this you could call a demand zone because the price, I'll forget about that. It doesn't matter. Okay, so what matters is the gap. And what matters is that this is the low. These are the lows. It swept them. And then you see this here? Okay, so here we have, you know, you could have waited until here, but you're at least trading this back up. If you're just a range trader and you're just looking for a sweep, you could have at least traded this back up here. But then notice what it did here. This is why you always keep a runner, right? Spot is different. Higher time frames is more spot plays, okay? But as a range trader, you're looking to target the highs, and you could have a nice 3-4 hour return on this. But then you leave a runner because what happens is it was countered actually, but then you see no follow through on the sell-off. So this one was tricky, right? Because it wasn't super clear, but it did hold. And then this candle here kind of gave a sign like, you know, it's not really going to break down. It's actually breaking to the upside. And then lo and behold, it did. Okay, so all of this is happening on many different time frames simultaneously. And also while we're here, we can see, like, these are 4H candles. See, it's not as clear as it was on the weekly. The daily probably would tell us something else, right? So let's just look on the daily now. Because I don't have like a really strong, what I have here is I'm seeing all this strong selling, and then, oh, look at that. Okay, see that candle? Now, it didn't directly mean, this is bringing up an excellent point here, because it didn't mean that there was necessarily going to be a direct move in the opposite direction. But it did give a sign. Smart money stepped in. Retail was puttering around here. Smart money stepped in. So even though it did go lower, okay, it didn't go much lower. And then, so this zone, anywhere in this candle, you could have bought spot. Okay, so that was actually a really strong sign. But it came down to 1 4/8 candle. And if you didn't trust that, you could trust the daily or the weekly. So let's actually look at the weekly, or the daily, because we already looked at the weekly. Okay, so I'm just going to type 1 day, 1D, enter. And then here we are, okay, and what do you notice? Okay, by the way, if you want to freeze the chart in one section, just hit Command, so you're not having to constantly reorganize it. Command, and then I'm scrolling on my wheel, on my mouse, but you can do it on your wheel, whatever you have as a mouse, if you're using the trackpad or whatever. But notice here also, okay, so this didn't exactly engulf all of this. It doesn't have to right away, but it was a sign of a reversal, of an impending reversal. So aggressive traders, I wouldn't necessarily enter right away at the close of the candle, but I would wait and let's see, maybe it comes back down, and all in here I'm looking for entries, and I'm maybe averaging in here. And that would have been a genius play, all from one candle. And you might have waited months or years for that candle. But notice, what is it about this candle? Well, it's not necessarily bigger than this candle here. But what is it that's different from this candle versus this candle? I'll tell you what it is. It's the fact that you had strong selling that was completely countered immediately. Here it wasn't really the case. I mean, it was and it wasn't. And then you also had this candle. So if we'd have seen this and then another strong red candle, but the candles here weren't really as strong. You notice they're kind of, the red candles are losing their momentum. Okay, and there's more green showing up now. So we see more of a balance that's starting to come in, and you see starting to see larger green candles. So this is setting the tone. Whereas here you had one strong green candle and it did signal a temporary reversal, but then another strong red candle. And then it's just kind of stumbling around. So it's still showing weakness down at the lows there. Okay, so this might seem like reading tea leaves, and it kind of is, but you're reading candles. And it can be confusing at first, but there are subtle nuances to this that are really worth understanding, and that's only comes through practice. And that's why if you look at previous price action and you use the replay mode, you'll see these standout candles that are just so glaringly obvious. For instance, here, this was a sweep of these range lows into this demand zone. This was a demand zone. It did fill this gap, which we previously identified. It filled not all of it, but some of it. And then, so then we had a reaction from that key level. So the key level was identified, demand zone and the gap. So we have two key levels. And then we have engulfing price action, yin yang. This was a trigger to long. Okay, and that was if you missed this. If you missed this. So you have, there's always more opportunities, especially as the price starts to trend up. Okay, there's always going to be more opportunities. Okay, so identifying value areas. This is homework. Identify ranges and value areas. Do it on the different time frames. Okay, so what do I mean by that? Let's go to the most recent price action for Bitcoin, because this is fresh in my mind. Now I have a few things going on here. What do you notice? Okay, so first of all, I was identifying previous range highs. Why? Well, because I wanted to see, as it started to come down, I wanted to see how low, if it would come down and tap into them, which it kind of did. It didn't quite hit that level, okay? So that was why that was there. But then notice the range in this case is actually a diagonal range. Now you can't really see this so much on the daily. Okay, you can't, let's bring this back to the weekly now. You can't really see this on the weekly either. Okay. But then what you can see, where can you see it? Well, I see it more clearly on the 4H. And notice it deviated here, and then a higher low here. Okay, and then it pushed above the mid with strength. So what does that mean? It's likely coming back up at least to here. Okay, so that's a positive sign for Bitcoin. But actually, I was thinking, well, it was possible when it was correcting down. I was thinking, where could this go down to? How would I know where it might come down to? Well, what were levels that hadn't been swept yet? Well, there was this weekly low. So look for weekly levels. Look for monthly levels. Look for where the monthly open is. So in this case, the monthly open, how do we know? Well, that would be right around 115.748, right? Because that's where the candle closed in July. It's now August. So is that a key inflection point? Well, it can be. You don't really need to focus so much on those levels, but sometimes we're looking for levels, key levels that could be swept. Okay, so in this case, there was this weekly level. Okay, and sometimes what you'll have with a chart, and you can play around with these ranges. Let me just hide this really quick, and then I'll come back to this why I have these levels, why I'm focusing on them right now. But what you'll notice is, like, we're looking for where the bulk of the price action has been contained for many weeks now. Now, notice this candle right here. That's kind of interesting, isn't it? Because it looks like the price wicked above, didn't close above here. Kind of closed above. Yeah, it's not the best candle to use as a range, right? But now, if we look on the monthly chart, we see a possible range. I'm going to use my parallel channel tool, and I'm going to hit the top, shift click, get the bottom, click. It's giving me my mid. Okay, now if you want to get this down to the exact value, you can do that in the settings of the parallel channel. That's close enough. Okay, so now I have a monthly. Now that's not giving me much on the monthly or the weekly, but if I drop down to the daily, I've got to go back because I was on the separate. Okay, so notice now we do have a range here. But can you see why I'm not really using this range? It did come down to the mid, and it's holding above the mid. But it's kind of, the price, there's too much kind of white or black space here. It's not really a range that I want to be working with. So in some cases though, that monthly chart, so like let me give you an example of where the monthly range actually was very helpful. So for instance, right here, this monthly candle, after this monthly candle closed, well, we clearly could see that the price was contained within this candle. And so now the question is it going to stay within the candle? Well, let's drop down and see on the lower time frames if the price is lining up with that. Now, if we look on the daily, okay, what do you notice here? Okay, most of the price is contained within here, and these are what we call what? Sweeps. And you see there was a sweep here, potential trigger to go long. But notice also that the price isn't quite coming up as high. It's not coming all the way to range highs, and it's dropping down below range lows. Well, it started doing it here. And so if you were a savvy trader, you would have done what? You would have tried to see, well, it's kind of sloping a little bit, isn't it? So this is also an art, right? And it's not perfect, right? If I just try to like line it up perfectly, but I'm trying to catch the candle bodies, and I'm trying to catch the bulk of that price action. And so I'm looking more like here, okay? And it's obeying that, notice? Until it doesn't, till what? It breaks out. And what is the breakout? What is a breakout candle? In the breakout course, it's a candle that's usually much larger than the candles around it. It stands out. And it's a clear, it doesn't have a rejection wick on it. So in this case, you could say, well, it was this series of 3 candles. Sometimes it's one, sometimes it's a couple in a row. In this case, it could have been these 3. Or if you really wanted to be conservative, well, isn't that an obvious breakout of this range here? And I believe that was on election day. Okay, so even if you had longed it here, even on higher leverage, and your stop was somewhere over here, he would have done just fine, right? Because after that, it went pushed all the way up to 108K. Okay, but you notice, had I not identified this value area, I wouldn't have known when the breakout was necessarily happening. Had I just been looking at the range from sort of a limited linear view, I might have thought, well, that's even there. I mean, that's still giving a breakout trigger, right? Because it's breaking above this high. But this actually gave me a little bit of an earlier signal because it broke and retested. Retest, which will often happen, means it comes back down to the level, but then it broke out. And so the beauty of the breakout strategy and the sweep strategy is that you can use it on the weekly, the daily, the 4H, the 1H, the 15 minute. Okay, it's all the same. It's all about finding standout candles that move away, and sometimes you're going to take a breakout trade and it's going to move away and then it's going to move back. Okay, that's inevitable, that will happen. But a lot of times, more times than you're wrong, you'll be right when you catch that standout candle. Okay, so in this case we've had another range here. This is a clear range. So you might identify this on the weekly, you might use the daily, see what makes the most sense. So in this case, you can see what was the initial high. I would say that it was this candle here, right? It did wick above here, but this was where it actually rejected. So let me just draw this on the weekly, okay? And then the low was, where was the first reaction? It was from this candle here. Now, I want to verify that this is accurate, and I'm going to do that by dropping down. No, I don't feel that that's fully accurate, because really the initial high was here. So this is where sometimes you need to look and see, okay? So here was the low. Okay, so now you can see, what did it do here? It actually did wick above, and it wicked above this candle as well, and then it swept. But if you would have waited for the daily close, you would have missed out on this trade. But if you were looking on, say, the 4H, okay, well, what happened? Sometimes you'll get an immediate rejection and you won't have time to respond. But you see, there's the yang. So that was actually the short trigger. So even if you waited for this candle to close, you could have entered here and been just fine. Stops up here. Targeting what? The lows as a 75% target, maybe targeting the mid as a 25% target. Okay, 25% here. Maybe it came back up here, stops were flat, you could have been stopped out, it's possible. Or if you were just holding on to it with some conviction, could have turned into a 3.6R trade. This is why it can't hurt to take profits, okay? But this is also why I don't move stops to break even until that first take profit level. But had my first take profit been here, I don't know if I would have moved it back to break even, because once you've taken profits, then what's the worst case? It comes back up, stops you out, and then you lose some, but not as much because you've already taken profits. So that's really it's a matter of your personal judgment, okay? But there was a sweep, there was a valid trigger, there was the yang. It didn't completely engulf everything, but it was the biggest red candle since the uptrend. Okay, now, and if we looked at this on the 15 minute, we might have seen something different. And that's why I highly recommend, when you get into a key zone, start looking on the lower time frame. Don't let it throw you off with all the noise, but I don't know what it just did. I think it just took me back to the beginning. It's throwing me off now with all the noise. Oh, that's what I did. I went, okay. So what I need to do is I need to freeze this in time, and then I need to go back to the 15 minute. Okay, so this is where I entered the trade on the 4H, but now maybe there was something on the lower time frame that gave me another sign. So what was it? Well, it's not as clear here. Yeah, it could have still been that 15 minute. Yeah, it could have still been the 4H. But in some cases, you'll have a consolidation, and then you'll have a value area, right? And most value areas, I say, they're only valid, according to my rules in the breakout courses, they're only valid if it's like 50 or more candles. So usually like a few, 8 to 12 hours minimum. So this maybe wouldn't have been valid. But if it was more of a compression and then a clear breakdown that countered this break to the upside, I mean, that would have been ideal. But it didn't give me much on the 15-minute, didn't in this case. But in some cases, in other cases, it will tell you more than that. It will give you an advance notice of what's gonna happen on the 4H. Okay, so I don't know if that makes sense, but let's drop out of this now. I'm just giving you an example of a range and how I identified the range, looking from the initial low to the initial high to the initial low, or vice versa. Okay, and so I just need to make sure 15.1.4 is my daily time frame. I'm gonna go back to the daily now. Okay, so but now what happened when it did break down from this range? Like, what was the signal here? Let's actually just extend this range. It is really just one big range for Bitcoin. Okay, it broke down, but then, well, what was an early sign that this maybe wasn't going to break down too much? Well, this was tricky here, right? Because it really looked like it was going to reclaim and push higher, but then engulfed again. Okay, so actually not yet, not ready yet. More downside. But then here you see one candle stand out here, another here, another here. So there's follow through on it. It's not instantly reversed. It's not instant. It's not an instant kind of sell pressure. So then you see, and then again here, if you waited for this, that's fine. I mean, obviously the trigger was really more here, and that was more of an aggressive, but it's a responsive move to be taking along from this level. Because why? Well, what did it do? Why was this a key level? Well, I'll tell you why. First of all, we had this gap that filled. Second of all, it actually filled into this gap as well. These are weekly gaps. So these are significant levels. Notice, forget the first gap, okay? Notice it went straight through the first gap into the second. Okay, that will happen. But notice it wicked here. I mean, it did come below. It filled almost the entirety of the gap, and then the move up. So this was really where, for Bitcoin, you're getting we've identified on the weekly, but now we're watching it more on the daily and the 4H. And then look at that daily candle there. From that zone, the key reaction there. So this is the trigger to go long. Okay? And so in this case, even a 4H candle could have told you that. Oh, but let me turn the replay off on this. So even a 4H on this, there was a 4H, lo and behold, right here. See that stand out? And then that doesn't mean that you necessarily get in right away, although you might not take the risk of waiting, right? But even if you had gotten in right away and not waited for a little bit of a pullback here, and your entry was, say, here, okay, and you're thinking, okay, this is more of a swing trade, so I'm going to do like an 8%, right? And I'm targeting, I want to see what it does. I want to see if it comes back, because it looks like this could turn into one big deviation back into this. And so what is the key to take profits on a trade like this? Well, is it giving you any indication that it wants to break down? And what would be the indication that it wants to break down? It's a standout candle in the other direction in a key zone. So what would be a key zone? It would be revisiting. Here's supply up here. What did it do at supply? It consolidated, it didn't break down, it moved higher. What did it do at supply here? Well, it breached here. Okay, so if you wanted to, you could have waited, and then what happened? Well, here I might have been getting a little nervous with this position, and what would I have done? Once it broke back down into the range here, I probably would have taken profits. You could have aggressively taken profits here, okay, knowing, well, usually what I always say is if it deviates one direction from the range, comes down this way, it's probably going to come up this way at some point. So this would have been a tremendous trade, a 4-hour trade. and just by itself. But even if you waited and waited for a sign that it was going to potentially reverse and took profits here, that's still almost a 4-hour trade, right? But then it actually didn't break down. It did come back down to the mid. And then, well, oh shoot, now it's coming back up. Well, do you rush back into a long? No. Well, what do you wait for? A breakout. And what's a breakout? Well, it would be a breakout of this level here, which was really here, this candle here. So it's ranges within ranges. This is the point. And you have to, you know, as a kid, I was always really good at geometry. It's just about spotting, it's just pattern recognition. And what we're looking for, the patterns, the standout candles. And that's it right there. Okay, that was the first. And if you missed that, you could have long there, but maybe not as good of a return there. But, you know, and then what? And then what happened? Well, it did push up all the way to 120s, but then you see these two standout candles that engulfed this. And it wasn't really a sustainable move up. So then I might have taken profits here. So, I mean, not as good of a trade here. But notice what's happening is it's getting choppier now. So this is actually signs of potentially nearing closer to the end of this bull market. I don't dare I say it. I mean, Ethereum is yet to return to all-time highs. I'm hoping that happens here in the next couple of weeks. But yeah, so you can make a lot of trades or you could try to kind of test your luck and get in the middle of the range. That's fair value, but you want to get in really at premium or discount. So this is a discount zone. This is a premium zone, where in the case of a premium, you're actually selling at a premium, whereas you're buying at a discount here. So when you're shorting, you're selling at a premium to buy back later down lower. So I might have shorted this somewhere in here. I don't think I did, but then when I saw that there wasn't really any follow through, I might have closed that trade. Or maybe 25% take profits, was at the middle of the range, and then stops flat. Okay, but notice how quickly my chart is getting messy. Once a range is no longer valid, once it's broken free from that, and it's far enough away, then I won't pay much attention to it anymore. And so right now, unless it comes back down, and then I might redraw it or bring it back. And that's why keeping your object tree open is really helpful. You know, having, or at least saving grouping them together. So now we can go back and we can say, well, I'm not really interested in this anymore because it's finished. Okay. But now I'm going to come back to my parallel channel and my horizontal ray, which is the previous high, and my rectangle. And why do I have that rectangle there? Think about it. It's a demand zone. This is the origin of the move. So a sharp move up, what was right before it was this cluster of price action. So could the price come back down and tap into this zone? Yes, I'm hoping that it doesn't right now, but it could. First it came and hit this level, okay? And why was this a zone of interest? Well, what else am I looking at? Aside from supply and demand, I'm looking for gaps. And notice this big strong weekly candle here, and the wicks did not meet. Okay, and it did come down, but even like each time it came down, so it didn't quite fill. Most of this gap remained open after this first sweep. Does that mean it's going to come back down again? Let me just get rid of this for now. Now, this isn't telling me much, but if I drop down and I see that inefficiency is what we call it, where there was an eager move from buyers and it wasn't countered by sellers. So eventually it's likely going to be. And notice it did come down and it came slightly below that mid. And that was actually the area where you would have wanted to get long. And what was the trigger to go long? Well, this was a tricky one. This one threw me a little bit. Why? Because, well, you had this candle, but it wasn't strong by itself, but then you see 4 more candles. So it kind of was the yang to balance the yin here. But that was so again, strong move down, but it couldn't follow through. It hit a wall. So that's really the context that's important to us, is this is like a capitulation is what you would call that, right? Same thing here, strong move down, but hit a wall, and you see the doji. So it couldn't break down lower. That means absorption. I don't need order books to tell me that, or footprints. I can see the absorption. in the candle. That's it. It's in the candle. But then this kind of threw me, right? And I was in an ETH long and I exited the long because of that one candle. But then notice it couldn't follow through again, and it's also putting in a lower high now. Or sorry, a low. Yeah, so a higher low. This is a higher low from here, right? And then you see more yen price action, and this was a very strong candle. And so this candle really was a sign for me to start to, and as I was watching Ethereum simultaneously, this is when I started to go back into longs on ETH. And it's trending up, but now you see sharp move down in just the last couple of hours. We'll see what happens with Bitcoin, but this is now, it's reclaimed its range, and so I would expect it to potentially come back up here, maybe even push higher. I don't know if it's ready to break out yet, but we will see. I don't know if it will break out ever. I mean, for all I know, the top could be in. It's quite possible. I'm really hoping that it's not. But yeah, that's basically what we're dealing with here with Bitcoin right now. It filled the gap, filled the weekly gap, most of it. It didn't tap into the demand zone, so that's a sign of there's still strength. And I know that there's still strength because these levels are being front run. So by front run, I mean they're buying before it hits the key level. So that's a good sign, right? And then this strength is a good sign. This also coincides with something I saw in my macro feed, which I saw on pro.twitter.com, where they announced that they're going to open up the 13 trillion retirement market to crypto. So people are going to be able to have crypto within their retirement accounts now in the US. So that's a big deal. So that is actually giving me a little bit more confidence in my longs, but it's not giving me everything I need to know, right? Some of this was happening before and as he was announcing. So this 4H candle, I really like this 4H. I like to see a pin bar type candle, but it's nice to see it down here as well. It's more of a reaction here. Now we'll see how this candle closes here, but it's not necessarily, it's just it's stair stepping up from here. So we may get more of a consolidation from this level. So that's kind of my analysis right now, just looking at candles. Okay, so the more you digest this information, the more you practice it, and just look for where are the key levels, where are the gaps, how do they fill, how long has price been in a range, how long has it been coiling. And you can even, they say if you want to be a great trader, trade on the 1 minute. I personally don't do that, but if you really want to see a whole lot of price action, well, like for instance on the 15 minute, can you find value areas? This is something I talk about in that free breakout course. I highly recommend you take it. It's a couple of hours of your time. It's totally free. How would we identify value areas on the 15 minute? Well, where do you see where the price starts to coil? Can you see here, right here? This was a really nice one, right? So this is the top, this is sort of the bottom of the value area. Notice the candles get really small, the volume kind of drops off, judging by this candle size. But then this candle, boom, stands out like a sore thumb. If it doesn't stick out like a sore thumb and it's not really obvious to you, then maybe you shouldn't be taking the trade. But look at that. If you had long this on the 15 minute, and I share a lot of examples of these in the free breakout course, but even if stops back inside the range, let's say a 1% stop in this case, because that's the benefit of trading on the lower time frames, is you can get more precise entries. And that's where but you wouldn't always be looking at that. You would be looking at that to see, well, has the price been coiling for some time, or did it just hit a key level? That's when we drop to the 15 minute. And sometimes we execute there. And in this case, you could have had a 5R just up to here. And up here, I mean, that would have been almost a 9R. Okay? So, but now Ethereum, I just want to give one more example, and then I'm going to hop off because it's been literally, I think, over 2 hours now that I've just been talking straight. And I really did just cover the bulk of my whole strategy. So, this isn't a traditional course. It's not broken up into nice, neat videos. But look at Ethereum. So this is where it's not what you would call a value area, but it is this is where I'm always looking, and you can train your eyes to see this. Well, there was this level here. There was this level here. You need at least 2 to draw a diagonal, but ideally it's 3, right? And the third one was happening here. And I wanted to see, is it going to break through this, or is it going to break down? What's going to happen first? You don't need to learn what the patterns are called. Don't study all that crap. A lot of the times, like, I mean, it's helpful to know what a double top is and a head and shoulders, but it's more about the breakouts and breakdowns from the ranges and from these value areas and from these trend lines. So in this case, I already knew what Bitcoin was doing. I already saw strength from Ethereum. I already saw that it was breaking back above its mid-range in this range that I identified, I believe, on the weekly. See, this was last week's high and low. Okay, and I thought, okay, well, that's a pretty suitable range for right now. Okay, it also contained a lot of this price action here if we were to extend these lines. But see these 2 candles here, very strong. And I also saw Ethereum perking up versus Bitcoin, so that is giving it strength. So I'm looking to see, like, on the lower time frames, is it going to break out of this? I want to see a strong candle, and lo and behold, it did. I actually anticipated this. I was long before it did this, but I added to it after. And but if you waited for the 4/8, then where would you have entered? All the way up here. But now if you were watching this on the 15-minute, you had an alert here, right? And then when it did tap it, you're watching it more closely, and then notice, what's that? That is a standout candle. It's much bigger. There's a whole sea of days of candles, and this is the biggest one. What does that tell you? Does that tell you that this is just going to instantly reverse? Or does that tell you that this is going to likely go much higher? And that could be over the course of a couple of hours. It could be over the course of several days. But so far, what does Ethereum have in its favor? That's a big, strong daily candle moving straight up and displacing, as we call it, closed above all of these candles. So the closure of the candle body, forget the wicks, it closed above this. So that's actually also in favor of Ethereum pushing higher. It might not happen right away. It may pull back somewhere down to 38 at some point. Okay, that's fine. But these 3 candles, or 4 candles, but really these 3 big candles are telling us what? As it pushes into range highs, do you really want to fade this? Do you really want to short from this level? No. It's likely going to eventually break through. And also, what else do I know? I have more context. I know that Ethereum is still yet to return to all-time highs. While BNB and Solana and XRP have all put in new all-time highs, Ethereum is still down 20-something%. So what is that telling me? This could happen in a couple of days. That's what it's telling me. And that's based on my experience. That's not, and I don't have a magic crystal ball. None of this is financial advice, as I'm always saying. But that's just kind of common sense, right? We're looking at, like, where is the power? It's always a power dynamic, and where is the power lying right now? Is it with the shorts or with the longs? Judging by the 4H candles, you see strong move up. It was balanced here, but then again, as I saw it start to push up, see, this kind of faked me out for a bit because I was long from 35s, and I think I exited, and then I had to re-enter higher. But that's okay because it's all about catching the overall direction. And so in this case, you would have expected this to come all the way back down with this strength of selling, but it didn't. It's continued to push up, and then it immediately broke through. And so is this a sign of higher or lower? For me, I think it's still going to go higher. And even as we watch, Bitcoin has come down more so today, but ETH BTC is actually also breaking out. So this, if we look on the daily time frame, you see that candle there? That's a breakout from that range there. And these 2 candles stand out. So what is that telling me? That Ethereum is likely going to push higher here versus Bitcoin in the coming days and hopefully weeks. So that's just basically a glimpse of my trading, but it's really the essence. And what you need to do is just find as many examples of sweeps and breakouts and gaps and demand supply zones as humanly possible. Study the wicks. Study the candles, know them like the back of your hand. You don't need to know what all the candles are called, but a pin bar is usually what? It's when you have a long wick and the body is less than a quarter of that. So, but a pin bar here didn't mean much. Why? Because it was pushing down and we didn't have any candles opposing it. Okay, that's Ethereum Bitcoin. So it has to be at a key zone. Okay, well there's actually Ethereum. Is this a key zone? Well, it came straight through the demand zone, and it did come in. It did tap this level here, but I don't quite remember the context. So the context is important. What was Bitcoin doing? And was it a key zone? I mean, not. Well, you could say it did wick through, and sometimes you'll see the price wick through a demand zone and then be bought up. But was there follow through after that? Because that's kind of an out of place candle, isn't it? And then are there actual green candles to follow that? Well, no, there was another red candle right after it. So would I impulsively long here after that? It's kind of scammy price action to me. You know, and you'll see more of this on altcoin charts. You won't see this as much on Bitcoin and Ethereum, but it does happen sometimes. And I don't know exactly what anomaly caused that. But really what was healthier price action was this and this here. There's a really key sign to go long. And actually that was where I went long. Well, I actually didn't go long here. I went long when it came back down to it. It did, and so I did get another opportunity by grace. I did have another opportunity, even though I think I initially missed the trigger here. Maybe I was trading something else. But yeah, so here was here was the real long trigger for Ethereum. After weeks and weeks of consolidating, and you'll see the wicks here. You see that? And then the move down, and then was instantly bought up. So you can see this was really the place for where Ethereum had just had enough, and then it eventually did push higher. So I hope that you found this masterclass very helpful, and I'm pretty maxed out mentally right now. I think it's over 2.5 hours, and if you made it through all the way, congratulations, good on you. I hope you make millions of dollars as a trader, and that it blesses your family and the generations to come. And that's really what this is all about. And again, if you want to support, just leave some likes, comments, and pay it forward, really. And if you want to join me and you want to trade on Blowfin, you can use my ref link. That always helps. And yeah, have a beautiful rest of your day. And if this is the last class or course that I ever create, then I feel grateful for that. And yeah, I'll see you on the flip side.